Hey guys, I'm BigE and welcome back to my trading camp. Today we're on episode 2 and we're going to be talking about trends and liquidity sweeps explained. But first, I'm going to go over candles and time frames. So, obviously, these are your candles. This is the body of a candle and these are wicks, okay? For you, if you haven't changed your colors yet, this is going to be a bullish candle and this is going to be a bearish candle. Bullish just means the trend is going up, the candle's going up. Bearish means that the candle's going down. Okay, pretty simple. If you look at my chart, my bullish candles are the gray ones and the bearish ones are the black ones. So when this candle was created, the opening was right here, and then maybe the candle dropped a little bit and then it pumped up. And this was the highest point that the candle got to, and then it dropped down a little bit and it closed right here. So since my candle opening was right here and my candle close was here, the close was above the opening, so that's why it's a bullish candle. Now on this one, the opening was here and the close was down here, so that's why it created a bearish candle. If it would have closed, the closure would have been right here, this would have been another bullish candle right here. And that's pretty much it. Not all candles have wicks, so let me just try to find a quick example real quick. Oh, there's one right here. So candle opened here at the top, dumped, went back up, and it closed. So it closed below the opening, so it made it a bearish candle. And there was no wick at the top. So not all candles have wicks on both sides, And also some candles can just like close right here and then just immediately drop down here. This could be due to like maybe the market closes on Friday right here. If you look at the bottom, it closes on Friday and then opened back up on Sunday at 4 p.m. for me. And that's why there's a gap. We can go over that in future videos, like why gaps are created. But for now, let's just focus on candles, trends, liquidity sweeps, and time frames. I know it's a lot, but if you just take notes and while I'm talking, you guys will master this pretty easily. Alright, so those are candles. Now, time frames. So every candle that you see is 15 minutes worth of time. Think of it like that. So you see this bearish candle, that's 15 minutes. So once 15 minutes are up, right, let's say at 10:30, a new candle is going to be formed. And if we zoom in, if we go down time frames, if we go down to the 5 minute, we're going to see 3 5-minute candles right here. And they should all be bearish, those 3 5-minute candles. So we're going to click it, and boom, 3 bearish 5-minute candles. So that's basically what candles are in time frames. The lower you go, it's like you're zooming in basically. Like the lower time frame you go, the more candles you see. The lowest time frame you want to go to is to the 1 minute, and the highest would be the daily or the 4 hour. And the reason you want to go all the way up to the 4 hour and 1 hour is to see your trend. So once you see your trend, you can kind of see where you can find a setup and then take a trade on. So that's pretty much it. Like I said, these 3 candles should make up one 15-minute candle, right? This one, for example, these 3, right? And then these 2 are forming. This is gonna end, and then a new 5-minute is gonna create, and that 15-minute is still gonna be running until 10:30. And there's a timer too. I'll go over my settings and my chart colors in another video, but for now you can stick to your own colors or the stock default ones. So yeah, those are candlesticks and time frames. Now we're gonna go over trends. So an uptrend is where the candles go from the bottom left of your screen all the way to the top right of your screen. And it should be pretty clear like what the trend looks like, So that's an uptrend. It's kind of crappy, sorry. And then a downtrend is from the top left of your screen to the bottom right of your screen. and it should look something like this. You know, it's not always going to be clear. It's going to be some consolidation like this, maybe a small little uptrend, but the overall trend should be down. Okay, so right here we can start. Actually, we'll start from here, from the top of this. So we went down, a little bit of a consolidation, aka sideways movement, you know, down, up, and then we just dumped. So this is a downtrend. Okay, here we pumped up, consolidated a little bit, pumped a little bit down, dumped a little bit down, but then we kept pumping up. So this is an uptrend, and it's simple as that. If you just start marking this out on the toolbar right here, you click path and you favorite to your toolbar, you know, just start marking it out, you know, start seeing the trends, drop time frames, you know, or go up in time frames, right? And just start seeing the market, right? The more you practice, the more you're gonna understand this quicker. And it's all just practice, you know. Don't kill yourself over trying to learn everything in like one sitting or in 1 month. You know, this took me like a year and a half to learn the fundamentals, and then the rest was psychology, right? So yeah, those are trends. Those are the only two trends: an uptrend and a downtrend. Okay, and then you will get consolidation, sideways movement, but that's not really a trend. You know, you don't want to trade in this, right? You want to trade in this or this. You never want to trade in choppy or consolidation. Okay, so now we're gonna be going over liquidity sweeps. So once you get used to trends, you're gonna start to realize that they leave liquidity, aka previous highs or previous lows. So right here, you know, we're like going up, we went down, and then we got like a bunch of sideways movement with these big candles, and then we went up, and then we dumped. What was left here? Liquidity. Buy side liquidity. Buy side liquidity means previous highs, and sell side liquidity means previous lows. So this will eventually be swept. So one day the market's gonna keep going, and then it's gonna go up and catch these, and then either keep pumping up or just go pump or dump back down. And this is useful because this correlates to my strategy. So, you know, if we look at these over here on the side, we can see, you know, we're going up, and then down, and we left this bottom wick as sell side liquidity, and the market eventually swept it. Okay, so we could go back in time. So boom, market's going up, it's going down, a little bit sideways, up, and then I left this wick. Boom, that is a buy side liquidity, a previous high, and the market will eventually sweep this. That's what it's called. Like when the candles go up and get it, it's called a sweep. So market's moving, it's pumping, and then look, boom, it swept it, right? And the same thing for previous lows. Right? Just pretend this is like we're barely on these candles. So the candles are forming, going in an uptrend. It left this low, uptrend, and then boom, it dumped and it swept it. And this is sell side liquidity. These are previous lows, and it swept it. So it doesn't matter how old a previous high or low is, it's gonna be swept eventually. I don't know why, but that's how the market makers do it. They always target previous lows or previous highs, no matter what. On the time frame I suggest to mark out your previous highs or lows would be the 15-minute or the 5-minute. I wouldn't really mark any previous highs or lows on the 1, 3, or 1 hour, unless like on the 1 hour. How do I say it without giving you guys too much info in one video? Just focus on the 5-minute and 15-minute, right? For previous highs and lows. That's all you guys need to know. And that's pretty much it. I mean, how to mark previous highs and lows? You basically just look at the highest point before the dump. So for a previous high, this was the highest point before it started dumping, and that would be your buy side liquidity. Now, sometimes there will be this candle could be higher than this. So what you would mark would be this one. It's not going to do it because it's not an actual wick. Take my magnet off. Sorry, guys. So you would mark that. And that would be your buy side liquidity, your previous high. Sometimes there is no wicks, so just mark the highest point between the two candles, or sometimes it's just one candle. And if there's like 3 candles or 4 candles that are like all around the similar height, just mark whatever one you want. It'll most likely sweep all of them. And for previous lows, same thing. You know, this dump, and then once it started reversing, the lowest point would be this one, not this one. So this would be your sell side liquidity, and obviously the market eventually swept it. And that's pretty much it, guys. Like I said, just start getting used to your candles, start getting used to trends, and then your time frame, start to understand them. Basically, every candle is whatever time frame you're on. So this candle is 5 minutes. This candle is every 3 minutes. So every 3 minutes, this will close, create a new one. Every 1 minute. These are going to close and create one the next minute. Right? It's pretty simple. It's basically like zooming into a big picture. If you start from the highest time frame. Damn, where am I at? Holy shit. Alright. Right? You see this big, fat, bearish candle, but if you zoom in, you start to see 4 of them of the 1 hour. Oh, it's still bearish, but we had a bullish one. Drop more. Oh, there's some bullish and bearish ones. You know, these will all help you with the strategy that I'm about to teach you guys. So just take your time at your own pace, marking out previous highs, previous lows, and looking at the market like that. That it'll eventually sweep those highs and lows. And getting used to your candles. This is the opening. That's the closing. The closing was above the opening. That's why it's a bullish candle. On this one, the opening was here and the closing was here. The closing was below the opening, so that's why it's a bearish candle. And this candle opened, closed, and then when the 5 minutes were up, it opened one right here. Dumped and pumped. Closed, 5 minutes were up, and then it made one right here, right? So you guys can do that too, you know, with your mouse. Like, okay, close here, opened here, closed, opened, closed, opened, closed. You know, start getting used to that. Start marking your liquidity, and yeah, start looking at the market like that, guys. But that's pretty much it. Sorry if I sound a little bit tired. It is kind of late. I need to go to bed for work tomorrow and to trade. But I'll probably make the 3rd episode right now since I'm already up. Thank you guys for watching. Please like and subscribe and share. Discord is in the link. I appreciate you guys, and like I said, I apologize if I'm not the best at teaching or describing things. I will be elaborating more things that I didn't really go into depth in this video and future videos, so please be patient with me, guys. It's my first time doing YouTube. I'm trying my best here. Alright, thanks guys. Peace.